You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Bupp has spent 14 years successfully making it happen. This is the Real Estate Investing for Cashflow podcast. Now, here's Kevin Bupp.
Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cashflow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Now, our guest for this week's show is commercial real estate and finance expert Ira Zlotowitz. Now, Ira is the president and founder of Eastern Union Funding, one of the largest national real estate brokerages servicing the commercial sector. Now, in the course of his career, Ira has earned extensive accolades, including being nominated in Crain's 40 Under 40, New Jersey Business 40 Under 40, and honored in Real Estate Forum's Tomorrow's Leaders. Now, Ira has built Eastern Union Funding into a national firm with over 100 real estate professionals and has closed more than $2.5 billion in the last 12 months alone. And here's what you're going to learn in our call with Ira today. You're going to learn how Ira got his start at an early age and has since gone on to build one of the largest commercial brokerages in the country. Ira and I are going to go and take the opposite approach than we usually do and discuss investing from the debt side of things and discuss how lending is a pathway for commercial real estate investment. This is owning the debt versus the actual real estate itself. We're going to discuss the various ways outside of investing where one can become successful in commercial real estate. You're going to learn how anyone can become a commercial real estate lender without even knowing it. Additionally, we're going to compare both the risk and the benefits associated with being on the debt side of the investment versus the more traditional way, which is owning the physical asset. Ira's going to walk us through a general assessment and compare the pros and cons of each. Also, you're going to learn what syndicated lending opportunities are available to both experienced and first-time lenders in the commercial real estate space, and much, much more. And so, guys, with that, I'm excited to get on to the show with Ira. Before we do, just a few quick housekeeping items. Like I do each and every week, I like to go through one personal best from the prior week and one professional best, and then we'll roll into the show with Ira. So very quickly, as far as a personal best, we recently added a new boat to our family. Now, for those of you who don't know, I live in Clearwater, Florida. Been down here in Florida for, I guess, about 18 or 19 years. And we love the water. We love spending time in the water. And so my family and I we live in a waterfront community here in the Gulf of Mexico and spend just about every weekend out on the water, whether we're hanging out at one of the many sandbars, cruising to a restaurant for date night, or maybe out fishing. The ocean is a huge part of our life. And so with that, we recently decided to upgrade our vessel. Now, I'm a person, whether it's real estate or any other type of material item, I'm a person who loves a good deal. And so I'm always keeping my eye out, whether it's a boat, a piece of real estate, or a vehicle, what have you. I'm always looking for a great deal. And then this opportunity struck for a lightly used 30-foot Jupiter center console. For those that know fishing boats, they'll know that Jupiter is made here in Florida. It's a very nice high-end boat. In any event, this is a lightly used 30-foot Jupiter center console. It's got twin Yamaha outboards. The boat really is everything that we wanted, and I was able to scoop it up for about 20% below current market value, which is really hard to do, especially in this really strong economy that we're in. Things are selling at top dollar. And then to make things even sweeter, I was able to sell our old boat in one day for $8,000 more than what we actually paid for it 2 years ago. So for those that are that are listening that are boat owners, that selling your used boat for more than what you paid for it is a rarity. It just doesn't happen. Boats typically lose value, and they lose value fairly quickly. So we're very excited about that. Looking forward to spending a lot of quality time with our family out in the water. So as far as professional best, I just got back a couple days ago from a jam-packed one-day event with 10 other very high-level investors in Springfield, Missouri. And this was to work on our coaching program. And some of you might know, a lot of you probably don't. We actually launched a mobile home park coaching program called the Mobile Home Park Academy about 3 years ago. Long story short, the program was such a success that we decided to take it down shortly after launching, shortly after our first batch of students, as it was pulling us away from our core business of investing in real estate. estate. So it's been on the side burner for a few years, and we've recently decided to dust off our coaching hats and bring it back. And the thing is our internal staff 3 years ago is nowhere near what it was, or nowhere near what it is today. And so we have a lot more in-house help to provide support to various students that end up joining the program. And so, teaching and helping others, really, it's a huge passion of mine. I enjoy it. I enjoy doing these podcasts. I enjoy the 30-minute calls I do on Friday with folks. I just really enjoy giving back and watching someone go from being a new investor and actually diving in and doing big deals. The coaching program is built around mobile home park investing, which is what we specialize in here today. And I love seeing others get into the space and actually turn it into a huge success. And so I'm super excited about the road that lies ahead. So just stay tuned for more information, as I'll be sharing it as we make some progress. Additionally, guys, if you love what we're doing here, be sure to go subscribe to the show and leave a rating and review on iTunes. If you leave a review, I'm going to reward you with an awesome free gift. It's something I've been working on behind the scenes here. I'll make an announcement about it here in the coming episodes. But go leave that review. Everyone that leaves a review will get this free gift, and I think you're going to love it. So again, I'm not going to divulge what it is right now, but here in the coming weeks, you'll learn what that free gift is going to be, and everyone that left a review is going to get it. And like I do every week, I like to give a shout to someone that's taking the time to do the review. This review here is from Morris Westland, and he says, "Great podcast, worth a listen. I've been meaning to do a review for Kevin's show for quite a while. This is a great podcast. Kevin Butt specializes in mobile home park investing, but this show is extremely diversified with real estate investing, podcasts covering topics from self-storage all the way to mortgage-backed note investing. Very well worth your time to become a subscriber. Whether you're an experienced real estate wheeling, dealing syndicator or a brand new newbie who needs help understanding what a cap rate is. Enjoy the show, Morris Westland." Well, Morris, thank you so much for taking the time to leave that review. And folks, the reviews mean so much. I'll give you a shout out, but additionally, the importance of these reviews is it helps us grow the show. It allows us to attract awesome guests like Ira to the show. And so take a minute, go do so if you haven't done it already. Lastly, guys, I want to remind you about the free 30-minute phone call with me that I offer each and every Friday. I set aside 3 30-minute segments out of my day to get on the phone with you. This is not a sales pitch, and there's no ulterior motive here. This is just a simple way of me being able to connect with you and pay it forward and help where I can. If you'd like to sign up for one of those phone calls, go to my website, kevinbupp.com. And one disclaimer, though. You must include detailed notes or questions of what you'd like to discuss during our call together. If you do not, then the call will be canceled, okay? My day is very busy, and so please put exactly what you'd like to chat about when scheduling that appointment. That way I can be best prepared for our 30 minutes together. And now, guys, without further ado, let's get on to the part of the show that you've been waiting on, our call with Ira Zlotowitz. So here we go. All right, guys, it is my honor to introduce my guest for today's show, founder and president of Eastern Union and the Ira Group, Ira Zlotowitz. Ira, how are you doing today, my friend?
Great. How are you? Thank you so much, Kevin.
I'm doing fantastic. Thank you for joining us here today. So first and foremost, for those folks that aren't familiar with you or your companies, maybe take a few minutes, Ira, and give us a little bit of your background.
So my background is I've pretty much been in commercial real estate finance for my whole career. I founded a company 18 years ago. I was 25 years old, called Eastern Union. We are commercial mortgage brokers. We are intermediaries between borrowers and banks. We lend on every asset type throughout the country. In the last 3 years, we closed $12 billion worth of transactions. And what makes us more unique in our space is that we're the top 10 in overall production in the country. Number 2 in transactions. We got to our numbers by doing, on the average, our average loan is in the single-digit millions. So although we do deals, we did one deal above 100 million, many deals in the 20, 30, 40, 50 million range, we stay to our core of those smaller deals and keep knocking those deals out.
Fantastic. So is that your primary niche, and you guys are looking to fulfill that need that is often overpassed by some of the other brokers in your space? Is that really where you guys have found that? It's not as much as that. It's that, like,
people are saying one of the things is they stick to your core.
Yeah.
If we made our money this way, most people say, hey, isn't it more exciting and have much better sex appeal to do a $100 million deal? That's right. That people move out and they neglect where they came from. And we made money in this space. Let's keep doubling down. Our clients grow with them, but we look to find clients within our space, and we're happy at any size, but we want to own and dominate the under $15, $20 million market.
Yeah. So let's talk about that primary catalyst of starting Eastern Union then. I mean, when did you identify that was really the core and that was the competency that you want to run with for the long term?
So, first of all, when I started in the business, to break into a business, you start breaking into a clientele, you cold call. And as you cold call people, you pick up deals. the first people who are giving us deals were obviously the smaller deals. They started with the smaller, tougher deals. We realized as we're becoming successful, we found an easy way of doing these deals. Then we realized that we were breaking into more clients. And I said, I don't understand. You've been in business for 20 years. What happened to your broker? He doesn't focus on these small deals. So he said, hey, let me keep doubling down. So we created our pitch around calling owners and say, can we start with your quote unquote smaller deal? Over time, we grew to older deals, but we don't forget our roots. And we started this way. We found this niche and we doubled down in that area.
I love it. I love everything about it. Willing to do what others aren't. I mean, it's interesting. We go through the same challenges ourselves in the niche that we're in here in commercial side of things, is that there's a number of brokers that we really like, that we've done a lot of business with, but ultimately there's a certain threshold where, we can't rely on them to do some of the smaller deals, smaller transaction sizes. And we've got kind of our go-to that is getting a lot of our business now because we've somewhat been ignored or neglected by some of the folks we had prior relationships with that weren't willing to do those smaller deals or didn't really put an emphasis on that side of the business. And so that's interesting. And I love that you guys are just willing to hustle and get it done and ultimately have created some very long-term clients because of it and have grown a very successful practice. So kudos to you. And I want to talk about Eastern Union. So that's kind of the background there. But there's a new venture that you've recently started called the Ira Group. And so I'd love to hear from your perspective, what the Ira Group is, and also the reasons for creating it, if you could.
So the Ira Group is basically those two things. It focuses on brokering of loan participations. So as Eastern Union as a broker, we'll typically work on a full transaction. Someone's looking to borrow $5 million, $3 million, $100 million. We'll find them a lender for that source. Through the Ira Group, it's when a lender is looking for participation in their loans, primarily bridge loans, where they're doing these loans on whether it's on from a fix and flip, just for $50,000 to $100,000, all the way up to in the tens of millions of dollars. A bridge loan, what happens if someone has an extra $1 million, or as small as $25,000, and they say, hey, I'd like to participate in those loans. We're brokering the loan participation. So we went in, that's the first focus, is brokering of participation. And it's also educating people in general there's an alternative way to make money within commercial real estate space. It's not just by buying, it's by lending. And lending has its benefits. You can be a first position mortgage, number one. And the second benefit is you can pick your level of risk. So unlike when you buy real estate, $1 million purchase price, either I think it's worth $1 million or it's not, and I make a mistake, I have no margin to error. I could decide, hey, real estate's cooling down. I don't want to be in that price at $1 million. I'm comfortable to lend you just $800,000. So you could be in a loan at the level of risk you want to be. I'm a little more conservative. I'll lend you $700,000. So you could pick your level of risk. Ultimately, my goal is to help the lenders that are making loans be able to get cheaper sources of money by brokering the equivalent of like crowdfunding, brokering of loan participations throughout the country. So this way they could trickle down to borrowers to pay less on bridge. On the other side, find people that are very conservative, money in the bank, scared when they listen to your show and they hear about these investments. Hey, it sounds great, but they only focus on the risk. So what are you nervous about? It might go down. So lend and get people that have money in the bank at 1-2% to say, hey, why don't they get comfortable lending at 50% loan to value, 60%, 70%, move their way up until they go over the line to go for equity.
Very interesting. So let's talk about the actual profile that you're looking for. Who's the ideal investor? Is there minimums? Do they have to be accredited? What type of returns might your investors be seeking?
So first of all, the terminology you have to change is to the loan participants, they're not investors. Because once you go to the investor space, it's a security issue. And that's where you talk about accredited investors and not. When it's loan participation, when lenders, people that are in the business of making loans, join together with others that want to making loans. Again, I'm not a securities lawyer, so I want to give that disclaimer. But from our understanding, and that's what the business we're in, is loan participation does not need security. So therefore, those normal questions don't apply. What does apply is just a matter of convenience. Do I want to deal? If I'm doing a $1 million loan, do I want to take $1,000 checks, put them together? So that's the question. So really, as a broker, we drew a line at $25,000. We said, if you are willing to put as little as $25,000 per loan and several times a year, you're somebody that is actually an actual lender. And from our understanding of the law, and I could bring you in and bring you into lenders and make that participation and make the brokerage together. We are not taking money from anybody. So I'm purely acting as Eastern as a broker for whole loans. There's a broker for participations. Unlike most of these platforms, they to themselves, they raise money for their own group. So all these questions, you only take money at what level? I'm going to bring people that want to participate into loans and bring them to crowdfunding platforms or to individual lenders, private lenders throughout the country.
Got it. No, that makes sense. You mentioned, first lien position. I mean, I'm assuming you're basically, you guys are helping facilitate the variety of different types of loans out there, whether it be first lien position, second lien, bridge, mezz. I mean, depending on the risk profile of the loan participants is ultimately whatever type of loan they might end up in. Is that correct?
Correct. So, but a good point you bring up here is at Eastern Union, we go from 0% to 100% full capital stack.
Okay.
For the Ira Group, we are not focusing on brokering any participation in anything but that first position slot, because from a reputation risk that I built a career up and we don't stay sterling and totally clean, I don't want to run into an reputation issue. The deals that go sour first are the higher the capital stack. I don't want to run into an issue. I meet someone and say, hey, why don't you think about lending? It's safer in their mind. And then they lost money. I trusted you. Even though I'm not legally bound to it, my reputation is, I think if someone's going into lending space because they're more conservative, they should stop at a first position. Within the first position, do an A piece or a B piece, structure differently potentially for your risk. But mezzanine is not something I tell an individual investor $100,000 to participate in mezz for his first loan.
Sure.
That's my humble opinion.
So the Ira Group has been around now for a number of months. You're fairly recently founded. Give me an example. I mean, have you guys actually placed a loan yet? I mean, have you had finalized the compilation of loan participants and actually created a loan at this point?
We actually did several loans over the last few years. As Eastern Union, we did 20% of our business last year. We closed last year in 2018. We closed $5 billion of transactions. $1 billion was bridge and hard money loans. Within those loans, we actually also brought participants to the lenders. So the only thing that really changed in the Ira Group is we formally opened up a new entity that's a standalone entity that's going to focus on this. So right now we're in the process of building up new participants throughout the country that are looking to participate, and we'll send them opportunities that match at that time for them. So we were successful already post-launch and pre-launch, because the only thing we're doing differently is making it into a formal entity to have a vehicle. If someone calls, $50,000, what could I do? I have a place for them to say, go to the Ira Group, fill out the form, and if we have something for you that matches, we'll send it your way. So this is deals transactions do all day long.
So I know this isn't a security; these are loan participants. But you mentioned the $25,000 minimum. Are there any other specifications that loan participant has to fall within to qualify, other than just having available capital?
Okay. So the $25,000 number, by the way, is only my number personally. The reason why I have a number of $25,000 is because the way the market is moving, and I'm sure you see with digital and technology, is that there are more alternate lenders in the marketplace. And the reason for that is that it's much easier because of technology to be able to take money from the crowd and pull things together. You don't care if you have 1,000 investors, they'll fill out a form. On the other hand, the actual lenders today aren't tech savvy. So I'm actually going to an old school lender who knows his local market and says, hey, I'm lending out $1 million. He just doesn't want to deal with $1,000 checks. So even if I tell him, what's the difference? I'll bring people together. They'll sign digital papers for you. He has his minimum. No one's willing to really go below 25,000, period. Most of them on the larger deals want to go to 50,000, 100. So the numbers really, because who am I bringing you to? My dream is to have Amazon, fulfillment by Amazon. If I could have some sort of technology like from the Ira Group, like fulfillment service that I could tell the borrower, the lender, say, listen, I pulled together $1 million for you. Why do you care? I'm handing on a silver platter. The money's ACH. We're not there yet. So right now I'm going old school, using technology to segue into the old school.
So that's the future. That's where you want to go, though. That's the vision.
The future is, I don't want to be as bold at this end of it, but the future is banking. Banks having tough time. They're getting the money from depositors. Why should you deposit there? And I think eventually we're going to put up a regular conventional loan. Someone say, hey, I'm doing a loan, a 5-year multifamily deal, 4%. Do you want to lock up your money in a 4% deal down the block from you? Would you rather keep it in the bank at 2 on a CD? So I think the whole banking is going to change. So now I'm starting hard money and watching it go down.
From an educational perspective, what have you found to be some of the biggest roadblocks of educating folks on this type of investing versus from an equity perspective, whether they're passive or active in a real estate endeavor? What have you found to be the biggest roadblocks?
The biggest roadblock on debt is that once they finally get comfortable, they realize, hey, the tax is very high. There's no sheltering on a regular loan. And number 2, the most I can make is, it's like, this is the coupon. If it's at 8%, 9%, 10%, that's the number. You're not making more than that. That they realize they have an issue with it. But then when you flip the coin to them and say, so why don't you go and buy? Don't be part of the first 80%. Go to the top 20. You can make 12, 14, 18, 20. But what happens if there's then you lose your money. Oh, no, forget it. So they're stuck in a bind. So that's why when I was really excited about that, what changed in my career was the eye-opener after being in this for 22 years, was when I realized that what used to be only available to the largest of investors to take $100 million worth of loans or $1 billion and tranche it out and break it up into the riskier piece, the less riskier piece, is now available on a deal-by-deal basis in what's called an A piece and a B piece. So now I can meet that person and say, listen here, your money's in the bank. So your money's at 2%. Let's go slow. Why don't you go over to someone doing a loan? It's an $800,000 loan. Take from the first $500,000, the 50% loan to value piece, and only make 6%. Only make 4%. Take it much better than the bank, and then get your feet wet and walk from that point on. But the hurdle on each side is, one, if you focus on the loss of money, equity is tough for you. You focus on it's all I'm going to make on the debt side, then you don't go there. So people are stuck in the middle. So that's really getting it to people getting out in their comfort zone, getting out of their comfort zone to a new comfort zone. And that's really the hope, is that they get into real estate through lending.
Got it. Does the Ira Group or a subsidiary of the Ira Group co-invest as a loan participant along these different loan products that are made?
Okay, so on purpose, I will never disclose at this point, not to you, I'm saying in general, if I'm investing in a loan or not. And the main reason is because I don't want anybody to be making their participation decision based on, if Ira sent it out, did this much business, his name is clean, he must only, so I want someone to make their own independent underwriting decisions. If I end up investing with someone, then I'm going to say, or loan participant with someone, and I end up doing it, my intention then is to say, I'm doing it, do you want to join me in my group? But I don't plan to tell people a way of getting in and dangling that carrot. That's right. I want to keep a Chinese wall in that area there.
Understood. As far as our listeners are concerned, Ira, what else do they need to know? Now, I mean, the typical listener to our show, very familiar with syndicated equity investments. I mean, that we talk about that, week in, week out, right? What else do they need to know about the debt side of things, as far as making a consideration of this, adding this possibly to their portfolio of investments? Is there any other particular piece of this that they need to be aware of? So
it's not so much that they have to be aware of. It's the same, it's whatever protection they use for themselves to equity. It's all the more so by debt, but they're in a safer position on the debt side of things. When I meet people that are in equity, I tell them the benefit for debt, if you're doing bridge debt. So I'm not talking about 4, 5, 6% rates. I'm talking about fix and flip. Someone's buying a house and he's going to fix it up, and a few months later he's going to move on. He's paying 10, 12%, 14%. I'm talking about someone buying an office building for $30 million and he's renovating it. Right now there's no cash flow, so he has to take a bridge loan, participating in those loans. So my advice really is to people that they should consider lending. It's really for 2 reasons to consider lending. One is these are short-term loans. So while you diversify your portfolio, while you're waiting for that next equity deal to come through, or if you have a certain amount of money you might need in a year from now or 18 months from now, you might want to diversify and or have short-term investments. But I also tell people is that the best deal you should probably start with, if you're about to invest equity in the deal, you start getting a little bit too nervous, it might be overpriced. Maybe consider on that same deal going on the debt side of that deal. And that's the example. So the Ira Group, I lose out a lot. I just had a transaction where I educated someone on this process, like I'm talking to you now. And, the person calls me back the next day and said, I wanted to thank you very much. Because of your idea to structure this 8 concept and safer piece, I found a local lender in my neighborhood. I went over to him. I structured the deal a certain way. I'm in with him. So I didn't make a commission, but, that's what goes around comes around. At a certain point, I'm sure I'll get a deal flow from it. But I think the education process, people really don't realize it's a solid alternative. More importantly, I'll say, is that someone that's going into the real estate space, they say, help me start by syndicating real estate purchases. They might want to consider syndicating real estate loans. It's an easier barrier to break into than it is on the real estate front.
Yeah. Very, very interesting. So just to clarify, the typical types of loans that we're talking about here are bridge loans, short-term loans. What is the average time span of one of these bridge loans, whether it be single family flip or a bridge product that's associated with an office, retail, what have you, a commercial type of project? What is the typical time frame?
I would say 12 to 18 is the typical. Okay. Then there's sometimes things that are very short, down to 6 months, and as long as 2 to 3 years. I advise people, if you're going into this space, bridge space, you really want to try to only do it, and you're more of a novice, you want to only try to do deals that our initial term are officially only 12 months. Because if you're going into a deal, someone's paying 12%, How could someone buy a deal and know now what's going to be 3 years on a speculative deal carrying at 12%? So that's why I tell people, if you're doing a bridge loan and the interest rate is double digits, it doesn't mean it's a bad deal. But you want to do those deals typically if you knew it 12 or a year or less. If you're very sophisticated, then you understand why, some people call expensive, some people call hard money rates. They call them, or bridge rates, they call them cheap equity. Yeah. So I would just advise someone that's getting to dabbling in the space, try to do things that it's not longer than 12 months, because you could typically have a horizon what's going to be in the next 12 months. You can pretty much get comfortable.
As far as from the loan participant's perspective, how much do we get to understand and know about the actual borrower or the sponsor, whatever you want to call that individual?
Okay, so in my case, full disclosure, the way I'm setting it up, I hate these ideas, these blind funds or these groups. That's where all the money, stop losing money. The way the Ira Group is going to be set up is that you'll be sent a deal if you're interested in participating, you'll be put directly in touch with the borrower. So I'm putting myself in a vulnerable situation that I might not get my commission from the lender that I'm supposed to get if they do a side deal. But at the end of the day, I care more about the reputation and the person not losing money. And I figure if I'm going to be honest with them, they'll be honest with me and I won't get taken advantage of. But my intention is you should not invest in a deal unless you understand the deal, where you're at, and drive by it, look at it. That's why people could choose. I'm building out a database throughout the country. I plan on having a few 100,000 investors over the next couple of years so that any type of loan structure or any type of risk tolerance or any market or any sub-product, there's somebody there for that product.
Mm-hmm. Very interesting. No, that's fantastic. So you guys kind of take yourselves out of that equation, let the loan participants speak directly with the borrower and let them dig into the business model of the borrower, the entity, the deal itself, the market that it's in. They're directly, connected to that individual. Is
Correct.
That right? Okay.
Correct. So I just to go back, where we got this on the Eastern Union front is where there's certain banks don't like dealing with brokers. Whatever the reason is. I mean, the number one reason is Ira, because you're involved. You know what's in the market, you cause me to lower my rate, so they don't want me in the middle. They want me to bring them deal flow, but I do the same thing. I tell the banker, listen here, it's your credit, you're making a decision, you should know the borrower direct. I'll never stand in the way, build a relationship direct with the borrower. Mm-hmm. I'll protect my credit. My credit's the fee, don't look to cut me out. I'll protect you, you protect me. Yep. So I took the same thing down to that $100,000 participation.
Got it. So you've been at this overall with Eastern Funding, with the Ira Group, you've been at this for many, many years now. Going back in time, if you could jump into a time machine, Ira, what advice would you give yourself back when you were, I think you said 25, when you first started Eastern Funding? What advice would you give yourself?
So the advice I'd give is that, and I keep doubling back to it, is that you stay to your core and stay to your core. And a lot of times as you start becoming more successful in different areas, people say, oh, you're already here. You know what other people are doing? And then before you know it, you're grabbing at a lot of different things. Before you know it, that's when the times I looked at the dip, it's because I try to be in too many places at one time. Mm-hmm. I want to give an interesting tidbit that people can relate to. They have this, you go, a new bank opens sometimes. They have this machine with dollar bills flying in, and you go into a room for 30 seconds, and as many dollar bills you can pull out while it's flying, you get it. And most people walk in and say, this is crazy, I'll get 30 of them. They walk out with one. And the person that I read from someone who says the trick to do that room is you got to walk into the room. You got to stay focused on $1 bill and grab it. And the next one, and because sometimes you're going to grab it, another one comes closer, you pull it. Stay focused, stay your core, and stay with your core. And I tell the same thing to people. You know what you're good at. You're a salesman. Don't try, if you're a salesman, to become a great organized person. Partner up. I say double your, don't know your weaknesses, double down on your strengths, and partner up to neutralize it. So if I'm a great communicator, not great details, let me partner up with an amazing detail person. So together we want to enter it.
Yeah, absolutely. The shiny object syndrome, avoid it at all costs, right? It's funny. Someone actually used that example about the room with the money flying around a couple of years ago. And their take on it is that the solution to walk out of there with the most money possible, Ira, was to, within 5 seconds, do a lot of practice before you go in there, but within 5 seconds, take off your shirt, tie a knot into the top of it, and then use that as a big basket, and focusing on scooping them up like a net versus trying to pick them up one by one. So I thought that was kind of...
But in my business, I said, don't cut corners, stay straight. Yeah. Long term, it comes back around.
Yeah, fair enough. Well, good deal. This has been absolutely phenomenal. Really appreciate you coming on the show, Ira. And, lots of golden nuggets that you shared with us here today. And if I could ask you before we say goodbye to one another, if there was one final golden nugget of advice or wisdom that you can leave with our listeners today that may inspire and motivate them as they progress in their real estate investing career, what would that one last golden nugget be?
It's a little bit of what I just said. The one line is that know your strengths, know your weaknesses. Don't try to fix your weaknesses. Polish your strengths.
Got it.
And partner up with people with that weaknesses for your strengths. And that's, as someone said a line, partners up for dancing. They use the line that partners up for dancing, but in real estate, almost every successful real estate deal person has a partner with them that typically is not similar to themselves. They have the same value system, but at the core, they have different core competencies, and together they can accomplish everything.
So as far as the Ira Group or Eastern Funding, how do you label yourself? Which of those individuals are you? And then do you have a partner or a senior level executive that offers those different complements that you might not have?
Yes, it's a great point. So again, it's everything also, I just want to clarify this point. It's not like it's to each person compared to where they're the best at. So on a scale of 1 to 10, what are you at 10 at or 12 at? And which item on that list, compared to your 10 is lower. So I am the part that I prefer not to deal with in the business is getting involved in the details, in the follow through details and legalities of it. So when I opened up a business, I opened up Abraham Bergman. Till today we're partners. Never had an argument, never had a fight. And his focus is on, like, when I opening up the Ira Group, he did all the research on the legal and said, okay, Ira, here's the story. This is the box you could live in. You can't go here. You can't go here. You could go here, but not. And then living on that box. And once I get accounts, then similarly, he would be a processor to process the loans to work that side of the business. And as I grew over the years, I found people within the organization that had different, better skill sets. And eventually today, I believe we have one team where if you take all the skills that a person needs to be successful and you break it down, I have the expert. I built around we live in a gig economy today where you need an Uber driver, just right now pay for the driver. You need someone to do artwork. You go online, you get pieces, what you need. I believe today we assembled the biggest group of experts in every one segment. So as a unit. So you pull one person out individually, they're not perfect. But within the team concept, as a firm, there's no transaction we cannot place and do anywhere in the country. And it's as a unit to be able to pull this all together.
Got it. Absolutely love it. Ira, this has been a lot of fun. And folks, if you want to learn more about Ira and the Ira Group or Eastern Funding, you can visit him at the iragroup.com. Or Ira, if you wouldn't mind sharing Eastern Funding as well for those folks that might be looking for.
EasternUnion.com. We finally, after 17 years, bought our full name. It used to be Eastern with letters afterward. We negotiated to buy it, so it's EasternUnion.com. We got the name.
Fantastic. Well, thank you, Ira, and thank you guys again for tuning into this week's show. Until we meet again next week, this is your host, Kevin Bupp, wishing you huge success.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com, and we'll see you next Monday morning.